Hello again. The Eurozone is back in crisis mode after the Italian election didn't produce the results that Brussels or the markets would have liked. I've been picking the bones after the situation with Angus Campbell from Capital Spreads. So this feels like a bit of an old school Eurozone crisis down in Italy. So what impact is this going to have on the equity markets? We've already seen quite a big sell-off in the FTSE.
Yeah, so the markets actually are down quite considerably, in particular the Italian market. And that's, as you say, is the fear that we could be seeing the next escalation of the Eurozone crisis. We've seen in the past various elections haven't gone the way that the Eurozone leaders and politicians would want. Greece, obviously, is the prime example there, where you had numerous elections, and that caused serious uncertainty as to whether Greece was going to stay in the euro or exit. So we've kind of got a similar situation here with Italy. Is this what is happening again? Of course, the problem with Italy is that it's a much bigger economy. It's a bigger country within the Eurozone. It has huge debts, far greater than any other country, and no one really kind of knows almost sort of where those debts actually lie, which is why you're seeing bank stocks in particular. Italian banking stocks are really suffering from the sell-off today. So where do we go from here? Well, there is a great deal of uncertainty that is being caused by the fact that Berlusconi has asked for a recount. He believes that even though he's just being picked to the post at the moment by percentage of vote, that he could possibly benefit from a recount. That is going to cause delay to any eventual sort of deal. There's no possibility at the moment, as things stand, of a potential coalition. So we have a country that's not being governed at the moment, and if it's not being governed, then there's no reforms going through, and there are no reforms that are needed for a country with an economy of its size and a country with its debts as well.
Yeah, but I'm just wondering where we go in terms of the markets, because there was this talk at the beginning of the year, this rotation from bonds to equities. The investor confidence has improved a lot, but are we not just going to go back to this this recently old idea of periphery bonds yield shooting up, equity markets selling off, and money going to safe havens like gold and the yen and the US dollar?
Well, I think if anything has taught, we've learned over the last 18 months, 2 years or so, is that the political resolve in the Eurozone is there. It may not be at the moment in Italy, but to keep the Euro bloc together is certainly there. And we've also seen action from the European Central Bank as well that has said it will do whatever it takes. Mario Draghi has said, of course, last summer, which caused this good rally from the summer to these heights of where we are in the equity markets, he'll do anything to save the euro. So there's willingness from the political side and the central bank side to keep this project going. Therefore, any sell-off which could continue may not be prolonged, and it may be well supported by that promise yet again from central bank intervention and other such leadership on the political side of things. So you may not see the sort of selling that we saw, say, during the banking crisis or any other flash crashes since then. But you can never discount it entirely. But it would seem that certainly there is support, central bank and political will to ensure that the euro project continues.
Yeah, there just seems to be such a contrast between Angela Merkel and her drive for austerity, and if Grillo, a former comedian, Berlusconi, a comedian in his own way, it could be said, if they get form a coalition in Italy, how do those two forces work?
Well, with great difficulty, and it's a very good point, because the clear thing that has come from the Italian election today or over the weekend, last couple of days, is that the vote is very much anti-austerity. The Italians are really reluctant to make the sort of take the bitter medicine that they need in order to bring their debts under control. So it is going to be very, very difficult if there's no clear-cut winner, if we don't get a leadership or a coalition that is dedicated to reform, and so with that, then that's just going to create further uncertainty and will potentially, inflame the eurozone debt crisis again, and bring equities and other risk assets under pressure.
Let's talk about the UK. The news hasn't been much better here. It seems the austerity drive is faltering in terms of the economic data. George Osborne is really sticking to his guns in terms of austerity. Do you not think that there's going to that political pressure is going to creep up on him and he's going to be forced to rethink it at any time?
Well, he has been forced to rethink regularly by the opposition Labour Party and pressure from the economic statistics. As you say, the UK economy is very sluggish, and that's partially through many reasons. Not only the eurozone crisis and that resulted from the banking crisis, but also the fact that there is austerity being placed on the UK economy at the moment. You can't really continue to mount more debts, in order to boost growth when you're almost certain in that case to lose the AAA credit rating, which of course the country has done in terms of Moody's rating for our sovereign debt. It's a very, very tricky situation, but him, from a political standpoint, will not want to seem to waver. Of course, as we get closer to the next general election, we'll have to see how, whether his stance will change. If it's looking likely that there'll be a landslide defeat for the coalition and Conservatives, then maybe they'll change tact at the last minute. I'm not quite sure. But I think it's important for the markets, and I think that, yes, we've seen sterling depreciate quite a bit, but maybe not as much as you would expect. I think that's because he is sticking with his guns. He is standing by his plan A, as it's called, and trying to repair the state of the fiscal position of the UK.
Angus Campbell from Capital Spreads there. That's all you'll be hearing from me for a while, partly because I'll be swapping this grey, miserable, damp weather that London has to offer with the Caribbean over the next couple of weeks. So for now, goodbye.